Good morning, traders. Good morning, traders from any part and every part of the world that you're joining this from. My name is Kefa Eric, one of the market analysts here at HFM. HFM, your number one financial broker and financial partner in the financial markets. Now, I would like to register my slight apologies, our slight apologies for the technical hitch that we had. We would have started at 10 with 13 minutes into time. But with that out of the way, this is going to be a pre-recorded YouTube video. You could find it on our platform at HFM Kenya, on YouTube at HFM Kenya. Kindly go like, subscribe, and click on the notification button so that you are not left out on the amazing content that we post on our YouTube channel from time to time. So I'll give you a 3-second moment of silence to literally click on the notification button and subscribe. Thank you. With that out of the way, we move on swiftly on from our fundamental analysis point of view. Remember, guys, fundamental analysis gives us the market direction. Yesterday we only had one high impact news coming and a number of geopolitical events which happened. The high impact news which came from the Eurozone. This was the info business climate, which shows from Germany, which shows the potential natural growth of the business environment in that part of the world. Now, it is important to note that the euro is used by 20 countries in Europe, but out of these 20 countries, we had 4 major. Selectively used the word had. We had 4 major countries which were kind of leading the other countries in terms of economic sentiments, which would enable us understand the strength and weakness of that particular pair. These ones were Britain, Germany, Italy, and France. But after the exit of Britain, that is during Brexit, we are now left with Germany, Italy, and France. Now, news coming from the Eurozone, coming from these countries, these 3 countries majorly, would want to be paying much more attention to them so that to understand the economic health of that part of the world. Now, the euro came out, this particular news from the Eurozone, that is the info climate, business climate, came out negative, slightly lower than expected, which would weaken the euro. So we'd like to see the euro corresponds to this by continuing to be on the bearish momentum. Moving on swiftly in other geopolitical events, for especially commodity traders, yesterday I know we all identified quite a significant bearish momentum of gold and oil. Why did we experience this? As we are going to be seeing on the charts in a few, this is because of the attempts of finding a truce or agreement to ceasefire in the Middle East, where we see Hezbollah-based militia group, which is based in Lebanon, going into negotiation through the Lebanese state to have a conversation with with Israel, of course, under the patronage of United States and other countries like France. So, in summary, the negotiation to stop fighting in the Middle East between the Hezbollah militia group based in Lebanon and the Israel state caused fear to diffuse from the financial markets. Less fear would mean that investors would go back to other financial spaces like stocks, indices, equity markets in general, and this caused. Okay, somebody was recording, no problem. Just remember to mute, and this would cause gold to be in quite a fast bearish run. We're going to demonstrate this. On top of that, Trump is said to be imposing tariffs, that is 25% tariffs. Those are import taxes on Canada, Mexico, and China, Now, this we shall see the implication of this on the charts also in regards to the USD card. And if you're a keen technical analyst and you look at the charts on DXY, which is the dollar index measuring the power of the USD against a basket of its peers, you'll see a little bit of consolidation, suggesting uncertainty to that regard. With that said, let's look at our usual suspects, beginning with Euro USD. Beginning with Euro USD. So let's zoom out fast a little bit. We see that we are reacting from a key level here, that is at 1.03929, which is good to see technical analysis and fundamental analysis aligning. Remember, fundamental analysis gives us market direction, technical analysis gives us entry and exits. So if we go to a much more lower time frame to see what's happening, then we zoom in. Would like to see this particular low being taken over here to suggest price. This particular low being taken over here to suggest that price is in a bearish momentum to support the fundamental analysis in question. So it would be nice to consider getting in for shorts in that regard. Moving on to GU, if we zoom out a little bit to see what is happening, quite broken a major and minor area of interest right here, and movement to the downside. If we move in a little bit much closer, we see that we have a break and retest of from the 126 1.26 124 area of interest and support for this matter. It has retested it. Would like to see it print even much more lower, supporting the sentimental value, the gap which was filled yesterday. We indicated on the series of the daily morning market call yesterday that it is going to be filled. At least that is what indications of technical analysis would dictate. 48% of the time this gap is normally filled. We saw that it got filled. Would like to go closer and have a closer look on what is happening. Now we would want to see this low being taken out to support the bearish momentum. Remember guys, being on the right side of the trend will tend to have you take less risk trades, and you will much more likely to see much more profitability in that sense. So would like to come and see this low being taken out for it to confirm our bias to the downside, and also to get a much more rewarding risk to reward. Moving on to Australian dollar USD, this pair of late has been consolidating for quite some time, and we see that it is reacting from the 0.64690 area of support. We see that it broke with a wick. That was a fake breakout. Would like to see it come and close below this area to confirm bias to the downside. If I go to a much more lower time frame to see what is happening, that is the 1 hour, we see here it closed below that area. Would like to see it print price much more lower, and if it comes and closes below 0.64245, it would support the bias to keep being in a bearish momentum in that regard. It is however important to know that AUD USD of late sentiments from the Sydney, Australia have not been so much clear to give us a clear perspective in movement of that price. Moving on swiftly to US dollar base currencies, so the US dollar coming in fast because of the strength of the US dollar currently that we have been experiencing in the recent past, from economic data coming from the US, and number two, from Trump's win. You might refer to is the Trump's trade, where we see the market reacting to the winning of Donald Trump as the president of the United States, where he had promised less taxes and less regulation for US-based companies, which gives impetus or power to the USD. Now we shall see USD-based currencies tend to be in a bullish run. We see here it reacted from the 0.89493 area of resistance. Would like to see come and take out higher highs. We see there is a gap here. It has to come and to be filled. But if we pay much more close attention, we see that this particular high here failed out to take this low. So in short, we want to see this high being taken out in attempt of price to go and fill this price, supporting that narrative. On the flip side, if we have where price is right now come and take out this recent low, it would suggest that the bearish momentum could be kicking in. So remember, guys, to be patient, because when you're patient, a patient will tend to pay. For US dollar JPY, from a higher time frame, we begin from the daily. Zoom in a little bit, zoom out, sorry, to see where it is reacting from. Moment. We see that we have been in a bullish run for quite some time. Significant highs been taken out. We see the first significant high has been taken out here. We see that we take out another high here, which also could be regarded to as a supply zone by smart SMC traders, has been taken out. Now if we go to a lower time frame to support that narrative, we want to see on the bullish run, significant highs being taken out. For example, this one minor high, and this one could be considered to be a much more significant high to be taken out to support the narrative of price movement to the upside. We see a little bit of rejection from this zone right here. So if we see this second high being taken out, it would give us much more confidence to be on a buy for that particular pair. On the flip side, when price comes and closes below this point of rejection, which could be considered at an area of interest at 140 and 153.564, would consider getting it for short. For USD card, we zoom out. We see that we broke above, this was this morning, beautiful price action. We see that we broke above the 1.39934, suggesting the US dollar is gaining strength and having a field day over the Canadian dollar. Why was this? This came out early in the morning, I think at 2 a.m. East African time. Why? Because Trump, the sentiments of Trump to impose tariff on Canada, which affects the Canadian dollar, tend to has had the results of strengthening the US dollar quite significantly, having a field day on the Canadian. Price is printing high right now. We would want to see it retrace in lower time frame, not to be so quick, because the concept of filling gaps will also tend to be obeyed to a certain extent in the concept of filling fair value gap also, that we see this fundamental candle here, Marabuzu, this fat bullish candle. Would want to see price print a little bit much lower for it to give us significant entries to maximize on the risk to reward to the upside. For USD JPY, from a daily time frame, for USD JPY, we see that we have been struggling, has been kind of consolidating, but of recent, as of today, that is yesterday New York session, we kind of broke out from that consolidation and price started moving much more lower, bearish if you may like, suggesting that the Japanese yen could be gaining strength. Remember, the week before last week, we had the Bank of Japan come out with strong economic sentiments, suggesting that the Japanese yen or the Japanese economy is improving. That is why we see that the Japanese yen has been struggling amongst its peers, which has been printed on the charts either by consolidation or bearish move. To give it much more trading meaning, we see it has taken out this low. Now, if this low right here, if price comes and print below the recent low, which was recently created, it would give us much more significance to keep on getting for sales. But guys, I would like to bring to your attention to be careful with Japanese pairs. They tend to move quite fast, they are quite volatile, and that is why we emphasize on risk management. For gold, I know many people have been waiting for this. Gold said to be the most traded asset. Now, for gold, we were in a clear bullish run over here. Price was printing higher highs and lower highs to the upside, closed above the 2688, and when it closed above the 2628 with the daily on the daily chart, most of us had the thought that it would come and take out the this all-time high at 27,787 or 2700 if you may like, moving closer to 2800, but that did not happen. Why? Because geopolitically speaking, we have had the Israel government go into talks with the Lebanese government to have a ceasefire between the Hezbollah, which is based in Lebanon, stop fighting with the Israel. Now, this will tend to have gold prices go lower. Why? Because fear is removed from the market, diffused from the market. Now, investors can go and put their assets into other financial instruments. Now, how long will this take? How long are we likely to see the bearish trend? As long as those conversations are happening, and somebody would tend to ask, what about the war in Eastern Europe? Are we putting it aside? No, we are not putting it aside. We are developing data and bias as this news is printed. So as it is right now, all focus is in the Middle East to see if those talks will bear fruits. If they won't bear fruits, of course, we will see the war continuing, and we shall see prices of gold keep printing even much more higher. But as it stands, the prices of gold is going low because of those talks are in quite advanced stages, and they are spearheaded by the United States and France, that is President Biden administration and President Macron of France. And that would mean that they are more likely to get to fruition, but that is not cast on stone. We shall keep monitoring this. Remember, guys, to observe risk management. Remember to trade with a reliable broker. HFM is a reliable broker, guaranteeing which offers quite relative competitive products, low spreads, low swaps, to give you an experience that you would tend to learn from and grow. On top of that, I would also bring it to you that this is by any chance not financial advice. This is for information purposes. Kindly do your due diligence before you get to make those decisions. See you tomorrow, the same place, the same time, to do things the same way that has proven consistency. Until then, take care and God bless. Thank you.